Yo, what's good? What's good? It's your boy Migo, the financial advisor. No, I'm just playing. But no, today we talking about cryptocurrencies, how to get into them, what it's good for, how to make money out of it, all that good shit. So I'm gonna start off giving y'all the rundown of crypto. Crypto been becoming very popular over the last few years because of big influencers and people that could speak or make a tweet and have a big impact on the economy. So what happened here recently was a lot of people was hearing about it and they were buying in, they buying, but not knowing they buying at the highest price point. So when shit like this happened and the market pulled back, they in losses. They tweaking right now like, oh damn, just it's a big loss. So you could be up one day, down the next. I've learned from experience, telling you what I know, not what I heard. And that's just how it is. You gotta be prepared for shit like this to happen. People, they buy and hold for a long term. They don't check in on the investments. They don't, they see they getting some money for a good month or so, and they be like, oh yeah, it's all good, I'm finna be rich, whoop de whoop. No, it ain't like that. You gotta tap in. You see what's going on and see what's about to happen next. You always gotta stay a step ahead, 2 steps ahead, 3 steps ahead. That's the only way you gonna win. To this day, it's made over the last couple of days, it's made about like a 50% pullback from 60,000, 64K down to 30K. That's a big loss. A lot of people profits was cut in half. So it's three things in this game. You a fish, you a shark, or you a whale. Whales got all the money, them the billionaires, them the folks a lot of people can't compete against, but it's how the rich keep getting richer. People can't compete against, it's hard to compete against the whales. You a shark, you gonna eat up everything. You gonna eat up all the plays. Fish, little fish, I consider, in my opinion, is you got your people, they want to buy and hold just small investments that want to just to see what it's gonna do and whatnot. Nothing wrong with that. You play the game however you want to play, but I like to trade in the markets. It's always something going on. So if you play the game right, you gonna eat. Simple as that. All right, without further explanation, we're gonna get into this chart. All right, what you're seeing here is the overall price action of Bitcoin. Bitcoin it's a good market to trade in, And overall, what happens in the crypto markets is they move in the cycle and they all run concurrently for some reason. Don't nobody know why, but it does. So what I mean by they all move the same way, as you can see here, they're all in the negative, all red. They all doing bad right now, but it's a good chance for buyers to come in because price is cheap. It's a lot of people stuck in their positions because, as I was saying, people talking about it, demand's going up. You see here the demand keep going up. They get to this high, people keep buying. And let's say, for an example, people buying in right here at this price point, like around 60K, they took a major loss because it dropped, 3 days, several days later, and now it's back around 33K. So that's a big loss for a lot of people, especially with the whales. The whales control the price action. They manipulate the markets because they buy so much in bulk. Demand goes so much higher, and when they sell and they leave people stranded in their positions. So that's why it's you can buy and hold long term, because as you clearly see, the value goes up over time. You can buy and hold, but what I personally, how I move, I have a portfolio that I buy and hold with, and I have a portfolio that I trade with. Buying and holding long term, it poses less risk on your portfolio. If you don't know what you're doing, it's a big risk to take to trade your account, in just hopes of just trying to hurry up and get rich, multiply your money, or whatever. It's a lot of risk. You got to be balanced mentally to do this. You gotta be able to control your emotions. Like it's a lot to it, you know. Not everybody is built for that, so it's a good thing to buy and hold long term. Let's say if you bought in around 2020 when around 16,000, 16.5 April 2021, we had a high of 63K. That's a big gain. That's a major play right there for a lot of people. They have other cryptos that hasn't blown up yet. They have tokens and stuff that's just being put out, and you buy those things when they so cheap. They basically free. So you buy them and then you wait till they become more of value, and then you sell them back to the market. That's how it goes. And it's always somebody on each end of the transaction. There's always somebody buying, always somebody selling. So we're looking at this Bitcoin, and my prediction, what I think is gonna happen, I believe it's gonna come back. As you can tell, it always comes back and hits a higher high. You know, just right now it's a major retracement, and there's a lot of people tweaking right now. You know, they stuck, they in the negatives, they don't know what to do. I'm a shark in the water, you know. I like to eat up everything, all the plays I'm getting to them. So let's look back right here. You see the first pullback, and we looking on the daily time frame here, by the way. First pullback lasted about 19 days. That was a 28% pullback. We had another retracement, lasted 7 days, 24%. Another 12-day retracement, 17. The one before that just happened was a 22% 12-day retracement, and now we are now on about a 16-day retracement at about over 40%, 47%, 45%. That's a major pullback, but it could be for a major come up. So you gotta get in where you fit in. And also, position that you bought at a high and the price moved against you, the best thing for you to do is to average down. Because let's say if you bought in at an average price, and these numbers ain't gonna be super accurate, I'm just throwing some numbers out there. So let's just say you bought in at an average price of 56,000, price moved against you, dropped down to 30,000. You negative 20K, so you don't know what to do. But your best thing to do is average down your position. I know it sounds crazy, especially for the beginners buying and holding, and you like, damn, what the fuck? Why would I put more money into it and lose more money? What goes up must come down, vice versa. Usually in this crypto market, I've showed you right here. It goes up, comes down, goes up, comes down. So in these dips is where you want to buy at. Buy the dips, because if you miss that bullish move, it's eventually going to come down and it's going to retrace to a support level. And at that support level is where you want to buy in at until it hits its next resistance level. And then that's where you want to sell at the next resistance, buy at the previous support, sell at the next resistance, and so forth. That's the most profitable move you can make. Buy low, sell high. It's the name of the game. That's all you got to do. You can't put your feelings into this. It's a cold game. Be prepared for the worst, hope for the best. So what I mean by averaging down is you buy up here at the 50,000 mark, it dropped down to 30,000. With you buying at 50,000, you put 50,000 in there for one Bitcoin, right? And then it dropped down to 30,000 in 2 days. 2 days later, you negative $20,000 in 2 days. You're gonna be tripping. So what your best bet is to do is to buy in around that support level that is hitting at the bottom, around the 30,000. Buy as much as you possibly can. All right, I'm not gonna tell you just to buy and then the market keep moving down. You got to identify your support and your resistance levels. If you see it, you see these long wicks on these candles, that means price is rejecting right here. It found some support. So sometime soon it should reverse and go back up. At the support level, you want to buy. And when you buy at the support level, what that's going to do is move your average cost lower from this 50,000 down closer to this 30,000. It's not going to give you an average cost of 30,000, but you can average your cost of your Bitcoin down. It might come down to like around 40,000, just to say, so when it goes back up and another 10,000, you'll be out of depth, and then anything past that will be profit. So by the time you get back up to your original position, you would have made you even more profit, So that's one thing to keep in mind. And, I know a lot of people got jobs to go to, so they can't sit there and watch the markets like some people can. But, you just gotta know what your money doing. It's your money, it's working for you. You just gotta know what's going on. You gotta stay in the loop. Gotta tap in and see what's going on. Otherwise, I ain't gonna say you destined to fail, because you could just hold it for years and look at it in like 5-6 years and it'd have been tripled or quadrupled or whatever. But I just say that stay in the loop, check in on it frequently, at least a few times a week, and see what's going on. A lot of people just like to buy it and forget about it. It's gonna take a while. It could take weeks, it could take a month, as you could see with all these other pullbacks. 19 days, 7 days, 12 days, 12 days, 11 days. Like, it could be a little while. And with this being the biggest one happening to date, it's hard to tell, because without you going off based off indicators, you looking at it right now and you seeing like, damn, I don't know what's gonna happen next. So you just tweaking, you sitting there watching. You just gotta chill though, because it really could eat you up if you let it. You really gotta chill and just let it do what it's gonna do. And with you buying and holding long term, it requires low maintenance. The only thing you really got to do is see what the market doing. You got to keep up with the price action. It's always good to have you a computer to check these things on, because a phone is just small. You're not going to be able to fit enough information on the phone screen. So you always want to have a larger screen to analyze your charts, to view your information and make your price prediction. On your phone it's small. You're trying to pinch out and whoop de whoop and all this, and it's too hard to do. So get you a computer, keep up with the price action. The mobile version, the mobile apps, it's good to have, but just for mobility, and that's it. That was the buying and holding. And now I'm gonna give you an example of what I mean by trading. So you have day traders, you got your swing trading, and then you have your long term. Day trading is you buying and selling a share within the same day. Swing trade, you buy it one day, sell it another day. Long term, it could be months plus, basically, to keep it simple. When you day trading, intraday, you trade within smaller time frames. Another thing, a lot of people say you're not a good trader if you can't trade without indicators, but I disagree with that, because who don't want an accurate entry? It makes no sense. So you use your indicators, use all the indicators you feel comfortable using. I got mine tuned as precise as I could get them, and they work for me. I profit off this. This is how I make money. Everybody trades differently. They use different indicators. They use different trading methods and whoop-de-whoop. But this is my way of doing it. Take my advice. You could leave it. It's up to you. But on a 15-minute time frame, each candle is a 15-minute time frame. So this is 15 minutes. This is 15, 15, 15, and so on. So basically, I got this 200-day moving average, this blue line you see up here. Price moving below the 200-day moving average is a downtrend, and anything above it is an uptrend. So, if you in a downtrend, of course, you're losing. You're gonna be in the negatives. And the uptrend is going up. Price is moving up. Demand is going higher. So basically, with you day trading, you can get in and out all of these positions all day. It's up to you. It's unlimited money you can make. The stock market's close at 3:30, 4:30, whatever. Forex market closes on the weekends. Crypto never closes, 24/7. It's jumping. Jump in. Y'all better dive in. So with you day trading, basically, you can get in. You capturing all the swings, and there is no limit to how many swings you can capture, how much money you can make. But there are transaction fees depending on which exchange, which brokerage you're using. I prefer Coinbase definitely over Robinhood. Robinhood is it's a beginner platform, and it's simple to use. But when you want to trade and start making, start getting in, Coinbase where you need to go. I have my indicators set. I can tell when price is oversold or overbought. I can come up here, and the way I have this VWAP indicator set, these gaps between these lines, these purple lines that you see here, are usually a 3 to 5% move. You can't capture every play. Can't be too greedy. Just take what you can get and get out. You be too greedy, you'll sink in the water. I have my entries time basically right here. So when price moves beyond this point, I know it's a good entry, because I look at my other indicator down here, my RSI. It tells me price is in the uptrend. It's moving up. It's crossing over this moving average. So I know it's a good time to enter this trade. And basically, when it falls out, it has these sharp dips and whatever. You know, it could be an immediate turnaround or whatever. So you just gotta watch what's going on when you trade, of course. So I know you gotta time your exit, right? So you know when it's moving back out of here or below this moving average, it's time to get out. It's crossed into here. I know I can make a play right here. So you know, I look at the previous price action and see what happened, like something similar to there, and to be able to tell if it's a profitable gain or not. So from the purple line to the red line is usually like 2 or 3%, and then same on the other side, the gain or a loss. So you know, I know this right here is like probably a 1.5–2% gain just right here. Ooh, actually it's from here to there. I get in here, exit there, that's a 3% gain. I'm good with that. So I hop out. Price retrace, it retraced a bit, came back down here. You see it came up, retraced, it's coming back up, and another good entry point right here. You see it's coming up here, testing this resistance. This 200-day moving average is testing that for resistance. It's gonna come back down, and you see it keeps testing, it rejects. And when price, you know, exit out over here, or actually, you know, you could have get in, got out there. You can capture a lot of swings. It depends on how you move. I don't like to stay in the trade for too long because you got to monitor your position. In a downtrend, in a choppy market like this, you can't stay in a position because bad shit happen real fast. You tend to lose money faster than you make it. Like, that's just how it is. Downtrend, there's no holding position. You can get in and out, take what you get, dip. Otherwise you'll find yourself somewhere you don't want to be at. You gotta trade with the trend. That's all you can do, because these whales, they manipulate the markets. They buy $1 billion worth. That's what I mean by a whale. Them the billionaires, the sharks, you know, them the middle upper class, and you know the fish is just, you know, the average that's trying to see what it's about, and they don't really know too much about it. They just trying to buy something and hoping to multiply their money in the long run as an investment. That's what investment is about anyway. So basically, yeah, that's all we gonna talk about for today. We gonna wrap it up. Yeah, just keep you informed, like keep on coming with this information, because I'm not trying to sell you nothing, none of that. Trying to keep you informed, keep you in the loop of what's going on, because this what I wake up to, I go to sleep to, this I live off of this right here, you know what I mean? And this, you can too. A lot of people want to, and they don't know nothing about it, but hey, this free game Friday. Damn, it's Sunday like a bitch. But anyway, we gonna do that for you. All right.